Hello, everyone. So, today our group chose six companies to talk about: Lockheed Martin, Boeing, Airbus, BAE Systems, GSK, SpaceX, and Embraer. So, today we're going to be talking about the effects of the financial distress on these companies, the effects of the financial distress on the CEO's compensation, how likely is financial distress to the following companies, the expected cost of financial distress, and the final comments on capital structure.
Today I will be comparing how financial distress affects the seven companies using GSK as a baseline. Starting with GSK, it operates in a stable industry with predictable pharmaceutical revenues. Its moderate debt and strong earnings coverage mean the stress risk is low, but if it did occur, the cost would be high, due to the loss of intangible value like patents or R&D. GSK keeps leverage modest to balance tax benefits with caution. Comparing it to Lockheed Martin, which also has stable cash flows thanks to long-term defense contracts, but takes on much more debt than GSK. While distress is unlikely, costs would be high if it happened given reliance on government contracts and defense assets. Its capital structure reflects confidence in stability. Boeing, however, sharply increased debt during the pandemic and faces much more volatile cash flows. That raised its distress risk significantly. Unlike GSK, whose drug assets are licensable, Boeing's aircraft and factories are hard to repurpose, making fire sale losses more severe. Airbus shares Boeing's industry risks but maintains better financials and has government backing, keeping its distress risk lower, though still higher than GSK's. Embraer, smaller and more vulnerable, responded to volatility by cutting debt significantly, taking a stance even more conservative than GSK to avoid distress. SpaceX goes further. With unpredictable cash flows and highly specialized assets, it avoids debt almost entirely. It trades tax benefits for flexibility, unlike GSK, which uses more leverage. Lastly, BAE Systems is like Lockheed, stable, moderately levered, and low risk of distress, though costs would be high due to defense-specific projects. In summary, GSK sets a midpoint. Lockheed and BAE take on more debt due to stability. Boeing and Airbus show how volatility raises distress risk. Embraer and SpaceX highlight why some firms avoid debt entirely when the cost of distress outweighs tax benefits.
Let's now look at how financial distress would impact CEO compensation across our selected companies. Starting with SpaceX, as a private company, Elon Musk's pay is primarily equity driven. A drop in valuation from this stress would reduce the value of his equity even if his normal salary isn't cut, reflecting economic distress over direct financial failure. Lockheed Martin and BAE Systems link CEO compensation to performance indicators like return on capital and earnings per share. If the firm enters financial distress, these metrics deteriorate, triggering reductions in bonuses and long-term incentive payouts, aligning with the idea that distress costs affect the firm value and shareholder returns. Airbus is highly dependent on performance-based stock compensation. As for the trade-off theory, equity-heavy compensation becomes a liability during downturns, reducing CEO pay while also attracting regulatory scrutiny, especially in the EU. For Boeing, past financial shocks like 737 MAX crisis and COVID-19 led to CEO bonus cuts and frozen equity awards. And this is a good example of how this stress affects compensation and reinforces the agency costs and indirect costs. Embraer, like others, ties CEO pays to profitability. This stress will lead to smaller bonuses and less valuable stock awards, again illustrating the trade-off between tax shields and distress costs when deciding capital structure. And finally, GSK bases a significant portion of executive pay on achieving long-term financial and strategic goals. In a distressed scenario, the company is likely to see a reduction or deferral in performance-based bonuses and equity incentives. And for all the companies combined, while base salaries remain relatively stable, financial distress clearly reduces overall CEO compensation by affecting the performance-based components.
For Lockheed Martin, the financial distress is at a low risk. This is because Lockheed Martin has strong profitability, high retained earnings and solid margins, a large and stable asset base, and low relative debt levels. Financial distress is also at low risk for Airbus. This is because Airbus has recovered well since COVID-19 disruptions and carries less debt relative to assets, with a strong European government backing and increased aircraft deliveries. BAE Systems is also low risk. This is mainly due to their conservative financial strategy, high government-backed defense revenue, and good working capital and retained earnings. Financial distress for Boeing is at a moderate risk. This is because it suffers from high debt from its 737 MAX crisis and from COVID-19. Recovery is underway, but still financially burdened, and there are narrower margins and high R&D expenses. Boeing had to borrow heavily during the 737 MAX grounding and pandemic. While its revenue is rebounding, debt and cash flow pressures still put it in a moderate risk area. Embraer is also at a moderate risk. Embraer is doing relatively well, but lacks the scale and stability of larger players, which limits its retained earnings and EBIT relative to assets. GSK is also at a moderate risk. I decided this because it does have strong fundamentals, but it is weighed slightly by R&D investment, litigation exposure, and the nature of pharma cash flows. Now for SpaceX, I think it's a high risk. This is because although it's a tech and space leader, SpaceX is privately held and invests massively in Starlink and launch systems. These ventures often produce negative short-term earnings and high debt, which puts it in a high-risk area, and even if its future outlook is strong, it's still a high risk because of those things.
After analyzing financial distress risks, it's crucial to assess whether these companies fully reap the benefits of their tax shields. This stems from the trade-off theory. The firm picks its capital structure by trading off the benefits of the tax shield from debt against the cost of financial distress and agency costs. Airbus benefits from interest tax shields and has a robust financial position. However, risks from its base divisions, including job cuts, could erode these advantages. BAE Systems, with stable government contracts and strong cash flow, effectively utilize its tax shields while keeping financial distress costs low. Embraer's conservative debt approach limits tax shield benefits but reduces financial distress risks, allowing it to remain resilient during downturns. Lockheed Martin, like BAE Systems, balances debt strategically, using tax shields while maintaining financial stability. Boeing, with $58 billion in debt, faces mounting distress costs. While it benefits from tax shields, the rising borrowing costs and reputational damage may actually outweigh these advantages. SpaceX, with aggressive expansion and uncertain profitability, risks accumulating distress costs that could surpass the benefits of tax shields. GSK, however, stands out. As a pharmaceutical giant, it enjoys tax benefits from debt without excessive distress risks, thanks to strong cash flows and diversified revenue streams. In summary, while some companies effectively utilize tax shields, others, like Boeing and SpaceX, risk distress costs outweighing the benefits.
Lockheed Martin is intertwined with the US defense industry, being the leading producer of military aircraft. This ensures a stable cash flow from government contractors. In the current situation, such reliance made the company to suffer a 71% drop in its net income compared with the previous year after it failed to meet the Navy's criteria for the 6th-gen fighter program. To mitigate this issue, Lockheed Martin should run an operational restructuring to ease financial distress. Boeing is suffering an asset deficiency due to an impact of current safety crisis and quality control issues. As the current 10K filing shows, the company liabilities exceeded its assets, thus showing the first signs of financial distress. To mitigate further financial struggles, the board of directors must focus on debt repayment or restructurization by increasing the interest tax shield. Embraer does not require any changes in its capital structure, thus this course of actions has led to its reported revenues to soar by 21% in 2024. The capital structure of Airbus does not require any alterations, showing the good debt-to-equity ratio of 0.73. The company has great prospects for development. The BAE Systems also reaps the benefit of stable capital structure, which is supported by company's growth. In comparison with its American counterparts, BAE Systems is less leveraged in its value, which highlights its stability even more. No changes in structure required. SpaceX is the only privately funded company on the list. It relies on money brought by institutional investors, government contractors, or Musk itself. The financial structure is high growth oriented, but with high risk prospects since its long-term sustainability depends solely on Starlink profitability and spaceship successful launches. For these reasons, SpaceX has the highest probability and cause of financial distress. In order not to increase the impact of financial distress, SpaceX should remain privately funded.